Welcome back. Well, we're getting pre-open rates in the next few minutes or so, but let's discuss a few stocks. We have Siddhartha Khemka, who's still with us. Siddhartha, tell us, what about Tata Power? You know, prima facie, those numbers look good. The problem is that coal prices have cooled off, and that's a large part of their profitability. How would you approach the stock at around this 205 odd levels?
Yes, Nigel. So I think the results came out to be better than the street expectations. But the overall outlook for the power sector, as you rightly said, coal prices have been a big concern. The demand on the other side has been pretty strong. But if you look clearly from Tata Power perspective, the key triggers that played out over the last several quarters was the deleveraging of the balance sheet, B, the renewable energy business, which was a big trigger. And we have already seen the value unlocking with the company selling stake in its renewable energy business. And the overall business, which is now seeing some improvement. I think with all of this, the valuations now are at a level where I think the street is not pretty constructive from here on. Unfortunately, we don't have a active coverage right now on Tata Power, but I think overall the stock should remain sideways.
Okay, that's on Tata Power. The other space I wanted to ask you about was what's happening in the FMCG space. So demand is coming back, but in certain pockets. From the results that have come out up until now, anything that you liked, anything that stood out for you as a portfolio stock?
Yeah, Sonia, I think that is what sums up the entire FMCG sector. If you look at the overall consumption space, the demand which had seen a sharp downtick after the festive season last year has now started recovering, and some pocket segments are witnessing a better recovery, especially on the discretionary side. So if you look at companies like Varun Beverages, on the beverage side, they have seen a strong recovery. The heat wave this summer has also helped them. Plus, the company has ventured into other segments, for example, the energy drink segment, the foods segment, which is driving a lot of growth. Despite the stock having done well, we believe that Varun Beverages is a steady compounding stock to be part of any long-term investment portfolio. So we believe within the overall FMCG space, one can definitely add or look at investing into Varun Beverages.
Okay, that's Varun Beverages, despite the 25% rise that you've seen, right, in
yes,
the last 3 months. So there's still more valuation headroom is what you're saying.
Yeah.
All right. You know what? We're just about heading into the market pre-opening rates. So we'll try and, get those rates in. But there's lots to talk about in terms of individual stocks. So let's get straight to that as well. You have Hero and TVS and CEAT that have reported their numbers. And in general, all numbers were better than what the street was estimating. Hero's numbers, there was a margin beat. TVS's earnings as well, margins above 10% for the 6th consecutive quarter for Hero. It was almost a 200 basis points rise that we saw in their earnings, in their margins, that is. And for CEAT, it's lower raw material costs and operational efficiencies that have aided the numbers this time around. So we'll go to that in a bit. But, Siddharth, I just wanted your thoughts on a couple of things, right? So now there is a very interesting thing that's happening in the auto space. Both TVS and Hero have now hit a 50,000 crore market cap. But they're both in sort of different spaces, because Hero caters largely to the rural markets. TVS has a big export exposure. But in the electric vehicle space, TVS is making huge strides. So between the two, which one would you prefer as an investment opportunity?
So, Sonia, I think TVS has made some strides in the EV space, and that has helped them take a lead, while the Hero, because of its the sister company getting into the electric business first, they were a late entrant. But if you look at the overall price performance, I think TVS Motors has seen a sharp run-up at current valuations. We do not see much upside, given that there is a risk of the EV disruption, especially on the two-wheeler side and the larger segment. Plus, they have a large exports market. Compared to that, if you look at Hero Moto, they have been underperforming because of the slowdown in demand in the core business, which is now witnessing some recovery. We are expecting that the growth to pick up from here. Raw material costs have come down, which has helped them improve the overall EBITDA margins. Plus, the valuations are a lot comfortable at, say, about 15 times FY24 compared to TVS Motors. So between the two, I would say that despite the near-term outperformance from TVS Motors, which could continue, from a one-year perspective, we have a buy rating and a positive view on Hero Moto. Compared to a neutral rating on TVS Motors, purely in terms of the high valuation that TVS Motors is currently trading at.
All right. The pre-open rates are on your screen. So let's just have HDFC and HDFC Bank in the pre-open in terms of how they're opening up. Things will take some time to settle, but because there is a clear, at least incremental negative on these names, maybe the reaction will be a little pronounced, and it is. So HDFC is down about 3%, and you've got HDFC Bank, which is also should also come up, and these are the three MSCI-related stocks which we need to focus on. That's HDFC. Let's have HDFC Bank as well. Yeah, there you go. 5% on HDFC Bank. And that is the reason why the market is down more than expected. By the way, yesterday, HDFC Bank and Reliance, between the three of them, contributed about 50-60 points to the Nifty out of the total 150 points, right? So that was more than a third of the gains on the Nifty came from just these three names. And today you've got both the HDFC twins working in the opposite direction, and that is largely, I'm assuming, the reason behind this. If you do get this 90, 100 odd point cut that we have on the index at this point in time. Siddharth is still with us. Siddharth, I don't know if you have coverage on names like GIC, RE, New India Assurance. If you do, any thoughts? I mean, both these spike up once in a while. I checked, it's not on the back of earnings or anything, but big moves yesterday.
Yeah, so Prashant, unfortunately, we don't have coverage on these names. But we have seen these kind of interest coming back in the overall insurance space. So after what happened in the budget, a lot of these insurance companies, they got under pressure. But from there, we have seen a good recovery in the likes of HDFC Life, SBI Life, with the gradual improvement in the other core business that they are doing. So I think that is a space that should do well. We are seeing a lot of interest in the government PSU stocks across the names. I think that could be flows-led buying interest in both of these insurance names as well.
Okay, Siddharth, we appreciate your thoughts. Thanks a lot for joining us on CNBC TV 18, and have a great day. Have a good weekend as well.